I can provide you with the major types of events and news that consistently influence investment decisions, and some examples of what's currently relevant. 1. Economic data releases. Inflation reports. These are huge. Inflation data, like the Consumer Price Index, CPI, in the US, shows how fast prices are rising. High inflation can lead to central banks raising interest rates, which impacts borrowing costs for companies and can slow economic growth. Currently, keep an eye on inflation reports from major economies like the US, Eurozone, and UK, as they heavily influence central bank decisions. Employment data. Reports like the US non-farm payrolls show how many jobs are being created or lost. Strong job growth is generally positive for the economy, while weak data can signal a slowdown. Currently, the labor market is being closely watched for signs of cooling, which could influence the Federal Reserve's interest rate decisions. GDP growth. Gross domestic product measures the overall health of an economy. Strong GDP growth is generally good for investments, while recessions are obviously negative. Currently, there are concerns about potential economic slowdowns or recessions in some major economies. Consumer spending. This data shows how much people are spending, which is a key driver of economic growth. Currently, consumer spending is being monitored for signs of weakening due to inflation and higher interest rates. 2. Central bank actions. Interest rate decisions. When central banks, like the Federal Reserve in the US or the European Central Bank, raise interest rates, it becomes more expensive for companies to borrow money, which can slow down investment in economic growth. Lowering rates has the opposite effect. Currently, central banks are at a crucial juncture, balancing the need to control inflation with the risk of causing a recession. Monetary policy statements. These statements provide insights into the central bank's thinking and future plans, which can heavily influence market sentiment. 3. Geopolitical events. Political instability. Events like wars, political crises, or major elections can create uncertainty and volatility in markets. Currently, the ongoing war in Ukraine, tensions between major powers, and upcoming elections in various countries are all factors being watched by investors. Trade relations. Changes in trade policies or trade wars can impact global supply chains and economic growth. 4. Company earnings and news. Earnings reports. When companies release their financial results, it can cause significant swings in their stock prices and impact overall market sentiment. Mergers and acquisitions. Major mergers or acquisitions can also move markets. Product launches and innovation. New technologies or successful product launches can boost investor confidence. 5. Other factors. Commodity prices. Changes in the prices of oil, gold, and other commodities can impact certain industries and the overall economy. Currency fluctuations. Changes in exchange rates can affect international investments. Investor sentiment. Overall market psychology and investor confidence can play a significant role in market movements. Where to stay updated. Reliable financial news sources. Stay informed by following reputable financial news websites like Bloomberg, Reuters, The Wall Street Journal, and the Financial Times. Central bank websites. Check the websites of central banks for official announcements and statements. Economic data calendars. Use economic calendars, available on many financial websites, to track upcoming data releases. By staying informed about these key events and news, you can make more informed investment decisions. Remember that past performance is not indicative of future results, and it's always advisable to consult with a qualified financial advisor before making any investment decisions.